said something that's really important there is industrial space. And there's terms like offshoring, onshoring that. Price Waterhouse Coopers and the Urban Land Institute just produced a report called the 2022 Emerging Trends in Real Estate. By the way, if anybody wants that 122-page report, you can send me an email. I'll be happy to forward that to you. But there was a few key things that came out of that report that I made a note of. And one was, it talks about the industrial distribution is the top sector for investors and developers. ICM has made a significant shift over the past 2 to 3 years to focus more of their new investment activity towards industrial buildings, which include logistics, warehousing, and distribution. I am fascinated by this, especially in a post-pandemic era. Can you speak to that? And obviously, you're not the only ones that see the opportunity there. Tell us more about your industrial, the shift towards that.
Sure. In fact, we're one of the investors quoted in that report. So no surprise to us that other investors are finding an opportunity in the same areas that we are. It's the trend towards industrial and the growth in the demand for industrial space in the US and even in Mexico really predates COVID. COVID was an accelerant for a couple of trends that were already driving the demand for industrial space. The first is no surprise to anybody. E-commerce has become a more and more prevalent force in retail spending. And what we saw through COVID was that people who had never made a purchase online suddenly began shopping online. And I think of my parents who had never bought anything online, and then COVID hit and they started ordering things to their door. So not all of that demand will return to bricks and mortar retail, and we see a permanent gapping higher in e-commerce spending, and that e-commerce will then begin to grow from its newer higher basis now. And if that was driving demand for industrial space for distribution and logistics across the U.S. pre-pandemic, COVID only accelerated that demand and not only pulled a lot of it forward, but ultimately means that there's going to be greater demand than there was pre-COVID. So, JLL also estimate that by 2025 there'll be a need for an additional 1 billion square feet of real estate or industrial real estate in the U.S. for distribution and logistics alone. So, that ultimately is a trend that we're trying to be a part of and to profit from. And we've made a number of investments in distribution and logistics facilities in the U.S. And continue to see that as a great opportunity for the next few years. The story in Mexico is a little bit different in the sense that not only is distribution and logistics an important part of the industrial landscape down there, but much more so than in Canada and in the U.S., manufacturing is an incredibly important part of the industrial landscape in Mexico. And what is sold into the US and distributed out of those distribution and logistics warehouses across the Southeast US and into the Western parts of the US as well is often made in Mexico. And ultimately, we see a great opportunity to invest in the growing number of companies that are seeking to not only relocate, but diversify their supply chains from Southeast Asia and including manufacturing in markets that are closer to the end customer. So I mentioned before the benefit, if you will, of NAFTA and now USMCA to the Mexican economy, and it makes Mexico a very attractive manufacturing jurisdiction for American companies or any companies looking to sell product into the US. So it's a growing market. It's grown more quickly over the last 15 to 18 months than in the last few years. Even though the last few years has been reasonably strong. So again, two real trends that we're trying to be a part of.